I'm Matt Bouchard with NAREITsREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Amy Tait, Chairman and CEO of Broadstone Real Estate. Amy, thanks so much for joining us again.
Thank you, Matt. I'm glad to be here again.
Now let's start with Broadtree Homes, your single-family home rental company. Last time we talked, the demand drivers were through the roof, and there was still a bit of a land grab for assets. How do things look now as we approach 2016?
It is so completely different. You're right. There was absolutely a pie eating contest going on. And thankfully, we had our net lease REIT to focus on, so we didn't need to grow Broadtree. We were able to be patient and disciplined and sit on the side. We had a few hundred homes, and they've been sort of our science experiment. And for us, the science experiment is working out really great. We're getting ready to scale up. We've got a couple hundred more units now under contract, and we see the best buying opportunities of existing stabilized portfolios that we've seen in 3 years. Most of our competition is capital constrained right now, and we're back to looking at this kind of like we would underwrite apartments. In fact, we're just getting ready to put, as sponsors, another $25 million of equity into the fund to both buy more single-family portfolios, but also start adding some apartments to the mix now that we have access to some former employees from Home Properties that just sold to Lone Star.
Now, switching over to Broadstone Net Lease, this has already been quite a busy year on the acquisition front for the company. Is that the sort of activity that you expect to continue in 2016? And as you look at the market, is this the time to buy or sell?
We do expect our activity to continue at an accelerated pace. So far this year in Broadstone Net Lease, we've bought about $400 million of assets, and depending on some closing dates as we hit year end, it will probably end up between $500 and $600 million of acquisitions this year. That's a 60% growth from where we started the year at $1 billion of assets. So we're on a roll, we're on fire, and we see better buying opportunities there also than we've seen in the past 2 years, just because a lot of our competition is either on the sidelines entirely, or they're finding that the public stock prices aren't as frothy as they used to be. They don't have as much of a premium, so they're not as competitive, and we've seen cap rates so far stay pretty flat throughout the last couple of years, but interest rates, although there's concerns about them going up today, they are still very attractive. We're still locking in very positive spreads, and we're bullish. We expect to acquire a similar amount next year.
And lastly, this summer, Broadstone announced an equity investment from Stone Point Capital. As a private company, what are you seeing in terms of capital raising activities?
Again, it's doing really, really well. Our model seems to be resonating very much with RIAs and other wealth managers, and equity is rolling in at $20 or $30 million a month for us. And it's great returns for our investors. Only 0.5% of the equity raise goes to cover capital raising costs. So that's why our results are so good. And as a result, between probably about a total of $100 million has come in this year from Stone Point, our new partner, who is fantastic, or people that they referred to us. We've brought in about $50 million through UPREIT transactions and a couple $100 million through the ordinary way of monthly closings. So we'll have raised about $350 million of equity this year. Our coffers are full, our leverage is low, and we have an open to buy right now of another $300 or $400 million based on just what's in hand today. So we're looking forward to starting off 2016 with a bang as well.
Great. Well, Amy, thank you so much for joining us.
Thanks, Matt.
For more from REITworld 2015, be sure to visit REIT.com.